Welcome. Today we will discuss the Ontario Securities Commission's, the OSC's, draft statement of priorities for 2025 to 2026, and its potential impact on exempt market dealers, EMDs, and the private capital markets. The OSC has published its draft statement of priorities for the fiscal year 2025-2026, outlining its regulatory direction for the coming period. This presentation will explore how the OSC's 6 strategic goals, outlined in this framework, will impact EMDs and participants in the private capital markets. We'll examine the key implications of these priorities for the industry, including any changes or new requirements that EMDs and private market participants should be aware of for 2025. The OSC has developed a strategic plan for 2024 to 2030, with 6 key goals to guide its work. The first goal is to deliver effective regulatory actions. This means quickly responding to emerging trends and issues in the markets. The second goal is to enhance the individual investor experience. The aim is to build confidence in the capital markets among retail investors. The third goal is to right-size regulation. This involves adapting the OSC's approach to changing market needs and risks. The fourth goal is to take a tougher response to misconduct. This means implementing visible enforcement actions to deter bad behavior. The fifth goal is to foster capital formation and innovation, supporting growth in both public and private markets. The sixth and final goal is to strengthen the OSC's influence, becoming a trusted voice and leader in the Canadian capital markets. The exempt market, also called the private capital markets, has seen a significant surge in investor interest over the last decade, driven by the growth in private financing channels. This shift is due to many issuers opting to stay private longer, limiting retail investors' access to early-stage and high-growth companies. In response, the OSC is working to broaden avenues for investor participation in the private capital markets. This includes consultations on expanding access to traditionally illiquid or long-term assets, like venture capital, infrastructure projects, and real estate. Let's now discuss the OSC's goals and its priorities in achieving them. Goal number 1 of the OSC's Statement of Priorities is to quickly deliver effective regulatory actions in anticipation of emerging trends. The OSC states that it is all about taking a proactive approach, staying ahead of critical developments, and addressing immediate risks to investors and markets. The OSC states that it uses a systematic process to identify, assess, and respond to trends so it can take more proactive and decisive action. And the OSC is enhancing its partnerships with other regulators and entities to improve its overall responsiveness. The key is being nimble and forward-looking so the OSC can get out in front of issues before they become major problems. The key priorities for the OSC to achieve its first goal of engagement and strategy includes enhancing stakeholder engagements by building strategic partnerships with regulators and key market entities. An example of this is the OSC's creation of a cross-disciplinary artificial intelligence, or AI strategy, to provide comprehensive oversight of AI in the capital markets. The OSC is developing this approach through international collaboration and stakeholder engagement to evaluate the need for additional guidance or rule changes to support responsible AI adoption. Goal number 2 of the OSC's Statement of Priorities involves enhancing the individual investor experience in 3 ways. 1. OSC seeks to foster greater trust and engagement by addressing the unique needs and risks of different investor segments. Second, this will involve tailored investor protection measures, as well as targeted outreach to underserved communities, drawing on behavioral science insights. And 3, investor outreach by building confidence and providing appropriate safeguards. The OSC believes it can empower more people to participate in and benefit from the capital markets. The OSC's key priorities to achieve goal number 2 involve implementing new investor protection mechanisms. First, the OSC is working to establish a statutory disgorgement framework. This will allow it to more efficiently distribute funds to investors who have been harmed. Second, the OSC is developing a regulatory framework. To give the Ombudsman for Banking Services and Investments, OBSI, binding decision authority on compensation of up to $350,000. The OSC states this will provide stronger oversight and new mechanisms to ensure investors receive the compensation they are owed. Overall, the OSC believes these initiatives are critical steps in enhancing the protection and recourse available to investors in Ontario's capital markets. The OSC believes it demonstrates its commitment to putting investors first and restoring trust in the financial system. Goal number 3 of the OSC's Statement of Priorities is to highlight its approach to dynamic right-sizing of regulation. The OSC states that it is focused on creating a tailored regulatory environment that supports thriving businesses by adapting regulations to specific industries. The OSC also believes in system review, where it regularly reviews regulations, which it believes is key to maintaining a modern, proportional framework that remains relevant. Lastly, the OSC states that it takes a risk-informed approach to balance investor protection and market integrity while allowing for effective capital allocation. The OSC believes this dynamic, flexible approach to regulation is critical for fostering innovation and growth in Ontario's capital markets. The key priorities for the OSC to achieve goal number 3 involves the delegation of registration functions to the Capital Markets Industry Regulatory Organization, CIRO. The OSC states that will happen in 2 phases. Phase 1 involves the successful delegation of registration functions for investment dealer and mutual fund dealer categories from the OSC to CIRO. Phase 2 involves consideration of delegating additional registration functions. Both phases will also involve enhanced OSC oversight on the delegated registration functions. The OSC states that this delegation of authority aims to streamline the registration process and improve efficiency for market participants. EMDs should take note of this delegation of authority from members of the Canadian Securities Administrators, the CSA, to CIRO. There is speculation that the CSA may seek to delegate EMD registration to CIRO, a self-regulatory organization. The CSA is expected to publish a request for comment on this matter in 2025, so EMDs should prepare for potential changes. EMDs need to be proactive in understanding and adapting to the evolving regulatory landscape to ensure compliance. While the details are still uncertain, EMDs should start planning and assessing how these potential changes could impact their business operations and compliance requirements. Goal number 4 of the OSC's Statement of Priorities involves strengthening its response to capital markets misconduct. The OSC states that it is tackling this challenge through 4 key areas: detection, deterrence, sanctions, and collections. In detection, the OSC is improving its tools to identify wrongdoing through advanced monitoring and analysis. In deterrence, the OSC is strengthening measures to prevent misconduct, in the first place through robust safeguards. When it comes to sanctions, the OSC is implementing more effective penalties to address market violations. And in collections, the OSC is enhancing its processes to recover funds and ensure accountability. These 4 pillars form a comprehensive strategy to tackle capital markets misconduct head-on. The OSC's key priorities to achieve goal number 4 involve the OSC's high-impact enforcement focus areas being fraud, crypto assets, misleading disclosures, and market abuse. For fraud, the OSC is targeting complex financial fraud schemes that harm investors. With crypto assets, the OSC is addressing securities violations involving digital assets like cryptocurrencies and digital tokens. On misleading disclosures, the OSC is focusing on inaccurate financial and non-financial reporting that misleads investors. And for market abuse, the OSC is combating manipulation and insider trading to protect the integrity of Ontario's markets. These 4 areas represent the OSC's top priorities for high-impact enforcement to achieve its overall goals. Goal number 5 of the OSC's Statement of Priorities is to foster capital formation and innovation in Ontario's financial markets. First, the OSC is focused on creating the right regulatory environment, one that encourages innovation and growth. This means attracting new investment, welcoming new products and services, and being open to novel regulatory approaches. Secondly, the OSC is placing a big emphasis on collaboration. The OSC seeks to work closely with industry and other regulators to identify areas for improvement and create conditions that are conducive to economic growth in Ontario. The OSC believes the key is striking the right balance, providing the right level of oversight and protection, while also enabling innovation and progress in Ontario's financial markets. The OSC's key priorities to achieve goal number 5 include: A. The OSC Test Lab. The OSC Test Lab is a key priority to help achieve Goal 5 by promoting innovation in Ontario's capital markets. The OSC states that it is continuing its initiatives announced last fiscal year to support early-stage capital raising through October 2025. The OSC also states that it seeks to continue to engage with stakeholders to get feedback on its existing test lab initiatives. Lastly, the OSC states that it will be assessing the impact of the test lab programs on innovation and capital formation. The OSC states that the insights it gains will help inform future policymaking to further support innovative companies and capital raising. In achieving goal number 5, the OSC states that it also seeks to B. Address financing gaps to support Ontario's economic growth. First, the OSC seeks to collaborate with government, external stakeholders, and thought leaders to identify the priority growth sectors for Ontario's economy. Next, the OSC seeks to conduct a detailed capital flow study to analyze the financing needs and gaps in these key sectors. Based on the insights from the capital flow study, the OSC states that it will consider new pilot programs and experiments to directly address the identified financing gaps. Alongside these practical initiatives, the OSC states that it will also work to raise awareness and engagement around its various consultations, pilot programs, and other efforts to improve access to capital. In achieving goal number 5, the OSC further states that C. It will promote capital formation, which initiatives include: 1. Monitoring the use of the listed issuer financing exemption, the life exemption, and considering potential refinements to improve its effectiveness. 2. Finalizing proposed amendments to implement a permanent well-known seasoned issuer WKSI regime, which will streamline the capital raising process for established public companies. 3. Monitoring the use of the self-certified investor prospectus exemption and considering potential rule amendments to ensure appropriate investor protections. And 4. Finalizing recommendations for policy changes based on feedback from industry committees on improving access to real-time market data, which is crucial for efficient capital markets. In achieving goal number 5, the OSC acknowledges that D. It seeks to enhance exempt market opportunities for investors in 3 ways. 1. The OSC seeks to reduce the hold period for securities distributed under the accredited investor exemption. This could improve liquidity for seasoned reporting issuers. 2. The OSC seeks to allow the reinvestment of proceeds from the investment limit maximums under the offering memorandum exemption, which it believes could give investors more flexibility. And 3. The OSC will continue to monitor its new exemption that allows EMDs to participate in prospectus offerings with investment dealers. The OSC believes it will help it understand how this exemption is being used in practice. The OSC believes these changes will strike the right balance between investor protection and facilitating capital formation in the exempt market. In achieving goal number 5, the OSC states, ye, that its proposed long-term asset fund regime is an important initiative to allow retail investors to access longer-term, less liquid assets. The OSC states that its prior consultation results show there is interest in developing this new fund structure to facilitate retail investment in these types of assets. If implemented, this regime could provide new investment opportunities for retail investors and create new avenues for capital formation in less liquid asset classes. This could help expand the investment options available to individual investors and potentially support the financing of longer-term projects and assets. Lastly, the OSC believes these key benefits involve increased access for retail investors and new sources of capital for less liquid asset classes. In achieving goal number 5, the OSC is also proposing F, the prohibition on short sellers from covering their positions using new stock issued in public offerings or private placements. This change could impact market dynamics and how investors approach short-selling strategies. The OSC states the goal is to protect issuers and maintain market integrity during new stock issuances. The OSC states that these amendments are intended to address concerns around short-selling activity during capital raises. By restricting the ability to cover shorts with new shares, the OSC seeks to support issuers and the overall market. In goal number 6, the OSC seeks to strengthen its influence as an organization, to be trusted and respected, and to have an impactful presence in capital markets. The OSC believes that building credibility in the capital markets means establishing the OSC as a reliable, impartial, and authoritative voice that market participants can turn to. Providing thought leadership on emerging risks and opportunities allows the OSC to shape important conversations and guide the industry. By becoming a key provider of impartial market information, the OSC seeks to be an essential source of data and insights for stakeholders. Lastly, by navigating Ontario's capital markets, the OSC seeks to support investors, issuers, and other participants in making informed decisions. Last but not least, to achieve goal number 6 of its statement of priorities, the OSC seeks to focus on 3 key priorities to enhance its international influence. 1. By strengthening the OSC's voice and participation within the International Organization of Securities Commissions, or IOSCO, to increase its impact on global regulatory policy. 2. By building market confidence, using the OSC's trusted reputation to boost confidence in Ontario's capital markets, the OSC seeks to attract more investment, capital markets activity, and new registrants. 3. By advancing thought leadership, the OSC seeks to leverage its new thought leadership division to drive regulatory innovation, conduct behavioral science research, and inform policy development for better regulatory outcomes. These 3 priorities build upon and reinforce each other to collectively strengthen the OSC's international influence and effectiveness in global capital markets. In conclusion, the OSC's draft statement of priorities has significant implications for EMDs and private capital market participants, including 1. Enhanced market access, creating new opportunities to expand retail investor participation in private markets, while maintaining robust investor protection measures. 2. Regulatory innovation, allowing EMDs to benefit from modernized regulatory frameworks and innovative approaches to market oversight. And 3. Growth potential, creating strategic priorities to create pathways for market expansion, while ensuring integrity and investor confidence in the private capital markets. These developments signal a transformative period for Ontario's capital markets, requiring proactive engagement from EMDs to capitalize on emerging opportunities. As for next steps, stay informed by regularly monitoring updates and consultations from the OSC. Engage by participating in stakeholder feedback opportunities to share your perspective. Prepare by anticipating and planning for potential regulatory shifts that may impact your business. Explore new opportunities within the evolving regulatory framework and innovate to stay ahead of the curve. For more information about the PCMA, we encourage you to visit our website at pcmacanada.com. Thanks for watching, and please like and subscribe and watch our next video. Thank you.